Welcome to the New Breed of Business. Today, we're here to talk about what's happening in the financial markets and some concerns that have emerged. You probably have seen that technology stocks have come down. There's concerns about artificial intelligence and all the investment that's being plowed into it. We're going to talk about that today. What does it mean? What are the implications on the financial markets and the Federal Reserve specifically? The banking system, private credit is a big issue in the middle of that. Jamie Dimon has called out private credit issues as cockroaches. We're going to talk
Mhm.
about the cockroaches. What are they? One of the cockroaches is a company called Tricolor, which is a subprime auto lender privately. We're going to talk about what happened there a little bit, but overall, there is a this general issue. And it's causing a lot of what was termed in the investment industry as risk off shorting or selling, whereby people get concerned. It's fear and greed. It's pretty simple, guys. Fear and greed are the market drivers. Fear and greed are not spirits of the living God, but they are the spirits that do animate the markets. That's not a good thing, but it's a reality. It's a reality of free will. And when free will is not submitted back to God, it becomes something else. So that's a little bit of what's happening. We always put this in the perspective of the Bible. What does God say about economy? What does He say about His people coming out of evil influences that are upon the economy, which is also referred to as the kingdom of Babylon? You can read about that in Revelation 18. But believers in Yeshua, Christians, Jewish people are commanded to come out of Babylon, both in the old days when they were held captive for 70 years, but also in the modern day and up to the Messiah's return, up to Jesus's return, commanded 18, Revelation 18:4, come out of Babylon. We'll talk a little bit about what that means, but practically, a lot of people always are talking about, hey, if there are concerns in the market and we want to sell assets, what do we do with it? What do we do with our money? What do we do? Well, the first thing we always talk about is trust in Jesus, trust in God. He is our provider. He can do things with or without money. But there's also ways we can work economically within our communities, especially locally. So there are investment opportunities and ways to help people beyond just giving to your favorite church or mission. There's ways that we can do economic things too together. We don't have to just depend on AI or technology. We can depend on God and work together in community with people. Technology is an amazing thing. I have my deep background as technology as an aside, and God can use that tremendously. But what we can't do is allow it to become a something we only depend on, or it is the primary thing that our focus becomes. Or another way of saying it is we can't allow our interactions to become so depersonalized that it's just about money, the internet, our computer and phones, technology, and then, it's not really any longer about interacting with people. So the whole creation story is about God creating man and woman and how that is the most important thing. Like when you leave this earth, you can't take AI with you, you can't take money with you, you can't take the tech with you. But what we can do is buy ourselves friends, as it speaks of in the scriptures, who will welcome us in eternal dwellings. We can utilize our lives, our purpose, our treasure for God and what He wants to accomplish. So let's come back to it. We have a thing called the storehouse vision. That's an implementation of what do we do when we want to invest to help people and invest to grow economy, create jobs in a godly way. What that affords is it's a private financing, if you will, where the community becomes the bank, like cooperatives of old, and ways of working together instead of just depending on publicly traded vehicles or financial investments. So back to AI. AI is being fine. AI artificial intelligence. Go look at the write-up. We've had discussions in the past about it. Our friend Gurney Hunt who is a scientist at IBM, has been working on quantum computing. He and the company, they're one of the forerunners in it. That's going to be the next leap beyond NVIDIA's chips that we talk about is into quantum computing. That's another level. But both of those things and AI itself require incredible investment in the physical realm. So, unlike the original internet times of investment in the late 90s and the early 2000s, which were a bubble, those investments were primarily venture capital, equity, such that those investors knew there was a risk that their investment could go to zero. So we had companies like AOL that ended up getting merged off and then written off. But then we had companies like Yahoo who were tremendously successful in the beginning, but then became very little. There were things like Ask Jeeves, if you remember, and other internet flops. But um, some of those companies went on to grow into what's now called the Magnificent Seven, companies like Amazon that were ultimately very successful. So things go in these boom and bust cycles. There was the boom, the bust was there when the internet tech bubble burst. The NASDAQ uh, index reached like 5,200, like in March of 2000, and then went way down to like it lost almost 80% of its value and did not recover for probably, I want to say 20 years before it came back. Now, of course, it's way off the charts again, and we have now potentially this other bubble. So, what about it? Well, this time the difference is that there's such an intense investment in the computing power, in the power itself, like the power grid, even new nuclear power plants being developed, and the data center real estate and cooling, which is another big issue itself. This requires real capital, hard capital, and a lot of it is being lent rather than it's just an equity investment. Now, when you have lending like that, that gets into the banking system. And if those loans fail, which the cockroaches is this issue, if the cockroaches fail and all of that investment money is not solid and these investments are going to work out, that can have a systemic problem throughout our financial system. So that's why we're here talking about this today. Michael Burry, who is famous for The Big Short, remember he?
Yes,
Michael
indeed.
Burry, he was the only guy, like one of the few, who said this is all messed up how we're accounting for these subprime mortgages. This is a problem. It's all going to blow up, and it did. And he was
Yeah.
one of the few who foresaw that and stuck to his guns. It's not so much that that's right or wrong. I think he was just saying, hey, don't get too frothy and greedy that you can't see the forest through the trees. You can't see these accounting anomalies. You can't see the systemic risk this is creating. So he's saying that again about AI, and that's why people are paying attention to it. He's not the only one. We talked about Jamie Dimon. We talked about there's others who we'll put in the write up. There's a really good podcast of a fellow who founded a large investment fund, and he's sounding the alarm bells too. So there's always going to be pundits on either side of this stuff, but I think it's important for us to look at things eyes wide open. We're always advocating come out and invest in ourselves and our communities. Don't just trust in the money or the markets going higher and higher and higher. And this is the risk. So Burry is saying he's pointing out like, hey, there's accounting issues with the way all of these companies are setting their earnings, and that has to do with depreciation of assets. In other words, everyone's buying these NVIDIA chips, you may have heard. Blackwell is the new, latest chipset. So all these AI data centers get powered by Blackwell chips, and that's why NVIDIA is worth a fortune. It's worth like several trillion now, which is crazy. It's the most valuable company in the world, I believe. And the issue with that is that what is the lifespan of a Blackwell GPU? That's a graphical processing unit. And the lifespan, according to NVIDIA itself, is actually very short. They look at it as if they launch a new chip, they have to write down their old chips in 1 year. The issue you've got is everyone is buying their chips, like Amazon and Google and all of the big hyperscalers, the ones who are implementing AI on a big scale, um, including all of when you hear things like the chat bots, such as Chat GPT, that's like a big AI push that is being, invested in all sorts of different ways, but they have to buy all this computing power. But the issue that Burry's pointing out is they're trying to depreciate that over 6 years, 5 or 6 years, which is to say, like the useful life of these computing powers are going to be long term. And he's arguing that's not true. You got to buy the new ones when they come out, and you're on this ever scaling mountain. So the proper length for depreciation should really be half that. And what he's saying is that essentially boosts earnings artificially by quite a bit. Like we're talking about billions and trillions of dollars. We have a graph, for example, in the write-up about that. So this is the issue. We've got the cockroaches, we've got the AI. AI is wonderful, but it's expensive. And if we're lending hard dollars into it, and the fact is, like a lot of our economic growth now is in this area, which you'd have to consider as speculative. In the old days, when it was speculative, that was okay. Think again, internet bubble, because equity investors knew they could lose it all. But when banks are lending into that, and these non-banks of private credit are letting into that, they're expecting to be repaid. But if all you're left with is a bunch of old chips and a half-built data center and a half-built nuclear power plant, and you lent billions and trillions of dollars into that, but then all of a sudden the economics don't work, you don't get repaid. And so that's a different dimension to things. And I think that's why it's worth understanding and paying attention to and evaluating it, because this very well is a warning sign about what the implications could be. Then other investors are saying, hey, when you couple that with government's need to pay their debts down and the lack of revenue that is likely to come from AI anytime soon, it's a bit of a setup for a disaster. So that's our discussion topic today. Welcome, everybody. Welcome to Lois. Welcome to my dad and everyone else who's watching. What do you guys think about this? And what are some of your questions? And what do you think about this? What do you care about? Dad, you want to take a crack at it?
Yeah, the only, there's so much news in about this, in all of the, whether it's the Wall Street Journal or the various business programs on TV. Um, and you're right. I mean, we have this huge credit bubble. I mean, you tie in what you're talking about with, approaching $40 trillion of government debt, which will never be paid back. It just will be, devaluation of the money. If this bubble, I don't know what the exact numbers are, but they're talking about trillions of dollars in investment in these data centers. And they're huge. I mean, when you see the pictures, the aerial pictures of these plants, they're larger than the largest automobile factory. They're just huge. And you mentioned nuclear power or any kind of power. They're going to suck up something like 15 or 20% of all electricity generated in the United States, and we don't have it. So I mean that in itself could cause a crash. I mean, if company A invests, $300 billion in a data center, and oh, we can't turn it on because there's no power, that would be one big, oh, we can't pay back that $300 billion.
Right. So it's like the AI models are working, and they're, but they're small scale. And so when you really leverage up everything, it is a tremendous amount of capital that has to be invested, a tremendous amount. So um, part of the concern, which is another factor, is circular investment. So we have stocks going through the roof in valuation, like off the chart valuations, like unprecedentedly high, expensive, in other words. And then you've got Nvidia investing in ChatGPT, investing in Google, investing in Microsoft, investing in each other, and they're going to set up the cloud computing for those guys, and they're going to buy the chips from these guys, and it's like feeding itself because they're each investing with their own stock into the other stock. And as someone pointed out here, this fellow Davide, he's a big investor out of Italy. They're having a conference right now, a Bloomberg conference in Singapore, and Davide Sierra is pointing out, hey, the problem we've got, guys, is that when you look at the revenue stream that needs to come out of these Magnificent Seven hyperscalers by the year 2030, no Wall Street model, no analyst model gets you there. There's a $2 trillion hole in revenue that there's no way you can achieve that under anyone's projections unless you literally had, instead of seven companies or stocks, you had another seven, meaning you'd have to like double the market size of those companies and revenue streams in order to get there. And he's pointing out it's just completely unrealistic. So you can't really justify the investment values. But his further point is because all the central banks are printing money to deal with their economic issues and being able to service their own debt, they've got to put out more debt, and there's more interest. That this extra credit has all gone into post the pandemic these stocks, and mainly these seven stocks. So all this money, this free cash that's floating around in the system, has ended up getting pushed into these investments, which artificially inflates their values. So the more governments have problems and print more money to deal with those problems, investors end up taking that free cash and stuffing it right into these high valuation AI stocks. So that's the further complication, according to Davide Sierra. So,
I have a question.
yeah,
Um,
go ahead,
yeah,
Lois.
to me, I did listening about the chips. It seems like that might be a weak link in this whole linkage stuff. And what causes these chips to wear out quickly? I mean, do they wear out? Do they burn out? What
No,
did they
that's a
do?
great question. It's a phenomenon known as Moore's Law. Moore's Law says computing keeps growing exponentially in terms of processing power available in the next chipset. So
Yeah.
it's not like they wear out. What happens is the next generation of chips are that much faster, better, and you can process more. So it renders obsolete the old ones.
Okay, even though they still work.
They still work, but then what
Okay.
happens is everyone's computing needs go up and up and up, and those become less efficient to run and ultimately get sunsetted. Think of it
Okay.
as like your PC. If you have an old PC with Windows 95, it
Yeah.
probably still works, but it's not very efficient for running anything. So you throw it out. And that's the same thing with the Blackwell chips or the last generation of NVIDIA chips is the next chipset comes out. The last one is like, well, we don't want to use those. They use twice as much power. They're they're half as fast. We need the other ones to compete with everybody else because we need to process more computations or AI. We need to
Yeah.
service AI even greater. So
Okay.
Moore's law is sort of a growth curve that then renders obsolete the older chips,
Okay.
and
Got it.
that's what
Well,
causes this phenomenon.
here's a question related to that exactly. The chips don't wear out. Is there a secondary market for
Yeah.
older chips? There must be because they're not going in the garbage dump. Somebody's using them.
Yeah, so like a classic example is Bitcoin miners, that's getting into a whole nother area, but Bitcoin mining requires a lot of computing power. The problem is you get paid in Bitcoin, and so the economics of that, how much you have to pay for power, pay for chips, how fast they can compute things, because the price keeps getting driven down, all the old chips, even though they have a market and can be run, they're inefficient and they can't compete. So you can't get a Bitcoin for your mining with the old chips. So nobody uses them for that. So then nobody uses those chips for anything. And they just sit there idle or they become worth less and no one wants them. And that's also if you know, like in the news about China and the US and this whole argument over can we sell China our best chips? And the answer is we don't want to because they will just then have a double advantage in everything they're doing competing with us if they get the best chips. So we say, no, no, you keep the old chips. No one wants those anyway. You guys use them and you'll be half as fast as we are. And that's the same argument in another perspective, if that makes sense. So,
Yeah.
yeah, you can sell them, but who's buying them? It's certainly not the people developing these data centers. They want the latest and greatest. And then this happens once more if quantum computing comes online. And right now, there are challenges with quantum computing because it's too hard right now to multiply it and scale it. It's too expensive. So they're getting it to work in the lab, and it's really fast and amazingly more efficient than like what NVIDIA is doing with the Blackwell chips. But they can't turn that into big data centers yet. It's still experimental. It's still in the laboratory. It's too power intensive. It requires too much cooling. They can't scale it and make it really big yet, but they will someday. And when they do, that'll be the next NVIDIA, will be the quantum computing. But you'll repeat the same cycle. And see, when you have hard capital trying to chase after this, it becomes a problem because to grow, you have to have the latest and greatest, you have to keep throwing money at it, throwing money at it. And if your profit, your revenue and profit don't ever catch up, it doesn't work. That's the risk that's in the system. So it's a great theory, but it requires so much build out for real estate, power, chipsets that cost, the latest, fastest chipsets that cost more and more money. You have to keep plowing investment into it. And so if you never can recover enough revenue or profit to cover it, it ends up blowing up down the line. And I think that's the risk that people are concerned about in the AI bubble is when this bubble bursts, is it going to be worse than the internet bubble bursting? And I think the argument is yes, because of hard money lending. It's not just everyone who's a venture capitalist who's willing to lose 100% of their investment. Now you have banks, non-banks, banks lending to non-banks. Like it's once more back into the Burry Big Short. Everything's lending itself into itself. And so it's like the game of musical chairs. If someone can't get that last chair, then it all falls down. I think that's the nursery rhyme, right? Ashes, ashes, it all falls down. So I think that's this risk that's out there. I think the technology itself is all valid, but it's people are getting so hyped up about it, and the values are getting so elevated. Then it's like building a house of cards, one assumption upon another, but now we're putting our whole economy is behind it. So everything the US is trying to accomplish in job growth and economy is really being fueled by all this money chasing after the
Data
AI
centers.
dream. And
Here's something that I read, and you probably did too. Probably was about 6 months ago. A Chinese company using, chips that were at least one or two generations behind the eight ball, was able to come up with programs that worked very efficiently. And it wasn't so much the speed of the chips, but it was I guess, the programming that fed in them and fed out of them. So
yes,
they were using old chips very efficiently.
Yeah, you're bringing up another great point. That company is called DeepSeek.
Yes.
I've
DeepSeek.
heard of that. Yeah.
DeepSeek was basically the Chinese Chat GPT. It was the
Yep.
Chinese equivalent of AI, or it is an AI platform. But what they did was they programmed it in such a clever fashion that they made it more efficient through the software instead of the
Right.
hardware. So the hardware thing we've been talking about is you just throw money at it, like buy the better chips, go faster. But what if you wrote your code such that it was more efficient and didn't need as much processing power? That's what they did. That's what
Oh,
DeepSeek did. And that was why, if you remember, when that news came out, the markets tanked because everybody was like, oh, well, our assumptions about AI and all these predominantly American entities. Whoa, wait a minute. Like, if DeepSeek can get a piece of the market in a valid way with less computing power, maybe all of our assumptions are bad. and, and the
Yeah,
markets came
exactly.
down. And so what it just highlights though is when
oh,
valuations are so pumped up artificially, you always are going to run a risk of like if one little hair's out of place, it's like
yeah.
the Jenga blocks tower, right? You remember that from The Big Short? The Jenga blocks are when you pull out one block out of the tower at a
Yeah,
time.
it falls down.
It doesn't fall down at first. You pull out one, oh, it's still up. Then you pull out another, oh, we're still there. And that's like this idea of AI valuations is, hey, we can pull out that the deep seek Jenga block. Oh, it didn't fall down. Like the markets came back. But the question is, what's the one assumption at very high elevation, valuations that will cause the whole tower to collapse? That's
Yeah.
the question. Like, what will happen if that
Weak
happens?
link.
Yeah, the weak link. Um, it's
Well, here's
uh,
um, knowing that they were able to do it through programming, I would think that that should have spurred a huge amount of, and we have some very good research, people in this country, who not forget the designing of the chips, but just the programming to write the code that makes them much more efficient would really have gotten on the ball, but you haven't heard much about that.
no, because I think first there's two factors, right? One is that if you got a model that works and NVIDIA's worth $4 trillion, keep on that model. Like, forget that other DeepSync thing. Let's just make better chips. Let's throw more resources into it. It's kind of like if our military technology works, let's just like build some more aircraft carriers. So I think that's one factor is like we have a model, we like it, it works, we've been rewarded, our valuation is $4 trillion. Why break that model? This is working for you, me, and everybody. Like everyone, Microsoft, you're in, we're in, Google's in, like now Oracle's in, everyone's in. Let's just keep going because it's like it's a wonderful dance party. So that's part of it. Is like you stick to what made you. And then the other part is like, okay, we could improve the code, we could make better chips, we could do both. Um, but there's a limited well to draw from in more efficient coding. You can't keep efficiently coding your way into results. In other words, like you can make your code better, but can you make it like 1 byte? And the answer is no. You can only reduce it a little bit. So that's the other factor I'd say is like where where the chip sets themselves can get smaller, 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 and more efficient, more efficient, more efficient. There's only so much you can do in like making your code more efficient. It's almost like saying like you can cut costs, but it's never going to replace a growth in revenue. It's another way of saying it.
Mm.
You
That
would
makes
think that the advancements in AI would AI itself would be able to write superior code over time.
it already does. So
Yeah,
AI is already writing the code. That's in fact one of its big uses in people who pay for the computing time with AI. You have to, by the way that these models work today is you have to subscribe to the services. And it's like paying a monthly fee. Well,
yeah,
the more computing power you suck up, you have to pay higher monthly fees. So the one of the biggest people paying up are software companies or companies that need software because AI is becoming like the new outsourcing. You can really get AI to write code and write it really well. It's not perfect. You have to change it, but it's a leverage tool. In other words, like 40 years ago, you deploy a number of software programmers and engineers right here in the United States. 20 years ago, they shipped all those jobs over to India. Today, they can replace all those jobs with AI. So you see the progression, like how that is going and gone. And yeah, AI can write the code, but the issue of just increasing efficiency with your coding is only a limited well. It only gives you so much back. So
Well, here's what the fellow that you mentioned, one of the, I guess several of the fellows who see the cliff approaching, is the fact that the huge investment, trillions of dollars, will not generate anywhere near the revenue to pay for that trillions of dollars.
right. And
I
that's
mean,
what
that's the real flaw.
yeah, and that's what Davide Serra was
Yeah.
saying, who manages a huge fund in Italy. He's saying like, guys, this is craziness. Like, where's there's nobody even projecting enough revenue to cover all this. So he's kind of pointing out like this is nuts. Like this doesn't even make sense on the face.
So we should
What
all
is,
start shorting the big seven.
Well, this
what
is
is this?
why.
What does this do to the economy of India? If we're pulling those jobs out of India, replacing them with AI, I mean
Yeah.
that's a country with billions of people. Where are they going to go?
But I think only a small percentage of, you get that. You're exactly right. You got 1.5 billion people, but a tiny percentage are the ones who are trained engineers who are able to do that kind of work. So it probably doesn't have much of an impact on the overall India, and they don't pay them very much either. So
Oh,
it
yeah.
probably wouldn't hurt the Indian economy that much.
Which is why they come here.
Yeah,
Well,
well, they know this is where the money is.
Yeah.
If I was working in India, if I was a brilliant engineer in India and I'm making, just for the sake of argument, I'm making $1,000 a month, and I know I can go to America and make $10,000 a month. What would be the incentive to stay in India?
And just listening to Greg, I just see a ripple effect of this, not just on Americans, and but there's just there's a ripple effect that this stuff is going to have.
Well, maybe one of the blessings, though, is remember that we have 8 billion people in the world, and probably, at least 5 billion of those are living in substandards. And you
Yeah,
would hope maybe AI and the various ways it works, and I can't even imagine, would help those people rise out of poverty.
yeah, that's
The only difficulty is that the current growth in AI is based on power, and a lot of those countries don't have any power
yeah,
or very little power.
yeah. There's an opportunity for oil and gas again,
Yes, dig baby
maybe
drill,
even coal.
drill baby drill.
yeah, I think what we're really getting into, which is part of why President Trump got elected, is with the shifting of technology and jobs and the increased productivity that that brings, who is the winner in terms of the economics of job creation? And what happened for years, both India and China soaked up all kinds of jobs and manufacturing opportunities and software opportunities, especially in India.
Yeah,
And we gave them up. Like, well, if they could do it cheaper, we're going to make more money. So let them have it.
yeah, right.
Now, then we realize, wait a minute, we don't have any jobs left for ourselves.
Yeah,
So this is another one of these complexities economically that we can't really have a good answer to because it's like chasing a tail. You just keep chasing it around and around. So again, our future hope in God's help and the Lord's return
yeah,
to
yeah,
get out of these bubble burst,
yeah.
cycles, these uh, sort of you go from trough to valley. Everyone's chasing after the dollar and the capital. Um, that doesn't itself generate virtuousness. That doesn't generate lasting good economy. So we're in a little bit of a dilemma because there's not, our old models, like we'll just call them the Milton Friedman pure capitalism, free market ideas of the world have failed, right? So that the whole idea was we're going to open up China. China's going to become like America. It'll be a
Boy,
democracy. It'll be a republic. We'll make everybody rich, and then everyone will be like us. And firstly, we did that with Japan, but we forgot to preach the gospel.
yeah.
So it did not
Right.
work as we thought it would. And this idea of like, hey, everyone's just going to be wonderfully taken care of by the invisible hand that will, through capital and expansion and free markets, will create the beauty of everything. And that's, I think, proven not true. So now we're
Well,
dealing with the repercussions of
the,
that.
the basis for all of that growth is still consumption. In other words, people in the world have to consume things. Otherwise, you don't make any money making things if nobody's buying them. So we have this, that's we get to this loop again.
Yeah, so we know this because the Bible talks about it. There's no hope other than putting our trust in the rock. Now, the rock is Jesus, and the rock is the Word of God. And if we go away and wander away from the Word of God, which I contend this is the new breed of business, we have,
Hmm.
whether free market capitalism or socialism, communism, we've wandered away from the Word. We've lost wisdom, and money is not the most important thing. People and God are the most important thing. And we need to take the rest time that God said, set aside your rest time, spend time with me, trust me, not your money. The modern economies have gotten really away from that. And that's why Revelation 18 is so front and center to look at today, because it's essentially a prophecy written by John the Revelator on the island of Patmos 2,000 years ago. God showed him these things would come, and they're coming. So we can't be unawares of that. We have to understand, no, we're in the middle of this. This harlot Babylon economic system is a global trading juggernaut where all of the leaders of the world are getting drunk out of her cup. So that's not just peace and prosperity. We're all going to get rich and everything is going to be a golden age of wonderful. This is the reality of what God is saying. Like, no, leading up to my return, that economic system is going to be judged. That's essentially what God says. So then there comes the question of what's the timing of it. But we always are advocating, don't get too caught up in the hype of the investment bubbles because that ends up bursting ultimately and put our focus on trust in what will last. In the Proverbs, it talks about building wealth slowly and how that is a virtue and how that is a blessing, that it's not like instant riches and gains and hey, I made 20%. I banged it out over here. I got a 10 banger over there. It's like the God's wisdom is like invest in the substance of people together with creation in the land, and you will see a lasting benefit. And I think the modern economy is very debt driven, right? We all know that. The whole harlot system is debt driven, and the debt provides a big giant leverage to like, let's get some more profit out of this thing. Let's put some debt on it. But when the whole world is operating like that, it's teetering into times of trouble. So we just have to have wisdom and understand we can't put our eggs in that basket because that basket may be nice for our retirement today, but it may be gone for the next generation's retirement tomorrow. So what are we going to do by faith differently so that we don't just pass the buck and say, well, good luck, worked for us, but hopefully it'll work a little bit longer. So I think that's part of stewardship and why we advocate for the storehouse vision of the way of returning things back to the people and to community. Um, that's the importance of doing that, because the musical chair games can only last for a period. And yes, it could be a nice party on the Titanic before the ship goes down. But is that really the best? So, that's why we're having these conversations, and hopefully they spur some creative ideas for you, the listener, in listening to this. Is how can God inspire you to develop the lasting substance of things that help people, elevate people, disciple people, grow people, even into job creation and wholesome, I even we talk about this, and we talk about it quite a bit. There's really good examples, if you can find them, needles in a haystack, like a Chick-fil-A, where you have a company that sticks to godly principles and values. They purposely don't do business, and they're not open on Sunday. Everyone knows that. A lot of people complain about it, say, who are not Christians, or people who respond to the Sabbath. And everyone continues to believe that, wow, they'd be so much more profitable if they just open that extra day. But the beauty of their model is they're the most profitable quick serve restaurant chain in the world. So how do you figure that? How do you explain that? You can't explain that, but reading the Bible and understanding God's economy is different than man's economy. Abel spoke a better word than Cain, right? So there's two different approaches to life and to economy, and I think that's what we're trying to highlight here in all these conversations. So thank you guys for being a part of it today. Any other questions about what's happening in the markets?
No, I'm going to have to take off, but I do have a lot to think about. Thank you, Craig. This has been really good for me. You've planted ideas in my head. So anyway, I'm going to have to take off. But anyway.
All right. Thanks, Lois. Go ahead,
Yeah,
Deb.
but just a final thought is that, all of this depends upon, our reliance upon Jesus. I mean, I tend to get distracted by the world and the world of financing, and the market's up, the market's down, but I at least know I come back to it after a while and I say, oh, okay, enough of that thought. Let's concentrate on higher things.
Yeah, and again, it's beautiful because God's so practical, but a lot of times people have to leave behind maybe what they view as a greater opportunity or return. Well, my neighbor got, he invested in these AI stocks and he's made a fortune. So I missed out. I really am stupid. I'm really a bad steward. I need to be better about investing in these things. So you get caught up in the hope of that. But
Oh,
when we
yeah.
just fall back to what Jesus said, which was, you cannot serve God
And
and
Mammon.
serve money. You got to pick one or the other. And if you try to serve money, or you're caught in a dynamic of having to serve money, you can't serve God. So don't try to rationalize or fool yourself. So I think that's part of this too, is if we're serving God and not the money can follow, but we're not dependent, we're not trusting in it. So I think that's a big.
Yeah. Let our Lord Jesus show us how to use those resources. That's your ministry.
Yeah, well, that's Jesus's ministry. John the Baptist was the one saying, I'm preparing the way of the Lord in his coming. And so it's like today we're saying we're preparing the way of the Lord in his return. And will he find faith on the earth when he returns? And the economic side is a big question mark. It's a big,
Hmm.
will Jesus find faith on the earth for trusting in him rather than in the banking system, the money, the financial markets, the profiteering? Um, you know, can we return back to the basics of godly biblical values? So,
Indeed.
all right.
Okay. Love you,
Thank
my son. I
God
will
bless you.
going to sign out.
All right. Thanks,
Bye
everybody.
bye.
Have a good week.